Let's bring on board Hemang Jani as well, who joins in. Hemang, so much to chat about. Why don't we start off with those numbers coming in from Jubilant Food? Brokerages are maintaining a hold or an equal weight rating, but they say that the weak demand environment will continue to weigh on margins and earnings growth. Is that what you're also fearing or worried about?
Yeah, so if you look at the performance, versus the market expectations, there is definitely certain amount of disappointment that we have seen, and to that extent, in the current climate, the stock should see a little bit of a negative reaction. And if you look at the management commentary, they are expecting about 5 to 6% kind of IFL growth for Domino's in the long term, and about 150 to 200 basis points increase in the EBITDA margin. There have been cut in the earning estimates across, and the overall CAGR, growth that one is building in is about 11 to 13%. So I think the stock should underperform in the current scenario because of the high valuations and not so great operating performance.
Hemant, wanted to understand morning firstly, if you've taken a look at the Honasa IPO pricing, seems reasonable, the parent of Mama Earth that is, long awaited. There were a lot of concerns about the valuation the company was quoting earlier when they did plan to IPO. Having said that, they're still loss-making. So just wanted to understand, you think investors would tread with caution, especially given the past experiences we've had with some of these fancied IPOs?
So I think if you look at the sentiment around us, the companies which are delivering good performance, they are getting beaten in the current scenario. So I think the appetite for any IPO, particularly the loss-making ones, I think is pretty much non-existent. Even if they have reduced the pricing, the fact remains that it remains a big loss-making company, and I don't think one should really look out for any kind of a short-term listing gain. Yes, once the stock is listed and if you see at a very attractive price, maybe at that time one can relook at it, but clearly it will avoid at this point.
Which is more like a buzz, but something where sources have told ET now that Cipla and the Torrent Pharma deal may not happen. Now, markets had questioned the management of Torrent Pharma in the con call over the weekend, and they said the following, that we are committed to not dent our balance sheet we are not going to dent our balance sheet, and we will not have leverage which cannot be managed. The numbers what they've given looks like, if you put the numbers together, looks like the deal actually may not happen. Also, ET now has been reporting, especially Anurag Joshi, my colleague, has been reporting that there could be a rift is not the right word, but there seems to be a disagreement between the promoter family of Cipla, the Hamid family, as to what the right value of stake sale could be. So looks like the Torrent Pharma or the Cipla buyout has run into rough weather. Blackstone was the first one which had thrown their the ring in the hat, but then they backed out. The only entity left in the race was Torrent Pharma, and looks like there could be a disagreement between the promoter family, which is the Hamid family, as to what really could be the right value for Cipla. Especially Torrent Pharma yesterday went against the market. It was up to 2.5%. Do you think the stock could be a contra buy in this choppy market?
Well, that's what I just recommended this morning. I think the stock is ready for an up move. But of course, one has to take calculated risk, because yesterday we saw that it made a low of 1820 and then again shot up to 1950 level. So technically, purely on technical terms, I would say 1870 would be the near-term support stop loss right now. And if things go right in the right direction, I think 1960 would be the trading target. And of course, positional trade could be even higher, going towards 2000 perhaps.
Right. Hemang, has the time come to now start buying into IT? I mean, even Tech Mahindra's performance was disappointing. The visibility as well, what the management has indicated, seems to be at an all-time low. Is it now all baked into the stock prices, you think?
I think even the way the US markets are showing, sell-off and weakness, and particularly the IT sector there. So there is going to be certain amount of rub-off because of the way things are, going on globally. And the performance is also, if you see, majority of the companies, they have not really delivered that well. Yes, in terms of pricing, in terms of valuations, the companies are looking attractive, but one will have to bear in mind that this kind of a sluggishness will continue till we see some uptick in the data points in terms of growth and the overall tech spending sentiment. So if you have a 6 months, 12 months kind of a view, I certainly think that IT has entered that value zone, but keeping in mind that the near term will be clouded by what's happening around us.
BSE, Hemang Jani, what's happening in BSE?
Yeah, so I think these are some of the green shoots, Nikunj, that we have in an otherwise market which is completely, there is an onslaught which is going on. So I think very low floating stock. B, the F&O part, they are really clocking good volumes. The recent increase in the transaction charges also is something that will add to the bottom line in a big way. And capital market play, you don't have too many options. The cash market segment also is growing. So people want some pie in that. And to that extent, I think MCX also has done reasonably well. So it's a small company where people just want to have some participation.
Okay, that's the take coming in on BSC. Let's just take a look at what the rest of the market has been up to. Well, of course, yesterday you had another weak session, as I guess how the start today is going to be. But metals did stage a comeback. What did not do well was some of the pharma, infrastructure, as well as telecom plays. So Bharti cracked quite a fair bit. Adani Enterprises, Adani Ports, both those stocks were lower, as was the case with Cipla, Divi's Labs, even other names like an Infosys, Bajaj Finance, Tata Motors, all of them did look weak. But the one sector which has been one of the best performers year to date, realty, that also has seen a bit of a crack coming in the last 5 trading sessions. Vishali, just wanted to get your sense in on where is it that you would recommending shorting at all, if at all, in the realty pack?
So I was looking at DLF also, overall reality, all these have got into a corrective move. So I would say yes, if you talk about overall, I will just give you the levels. Well, so we've already seen a downslide, but I would say that maybe 1100, a little bit of a bounce of say 1100, 1120 would be a good level to go on a sell strategy for a target of 1020.
Right. Soni, structurally, what's looking like the weakest sector in the market right now?
So if we look at completely from the perspective of rollovers, we're seeing a lot of shorts coming in, especially in chemical sector. I think that would be an underperforming sector that we can see, and stocks individually in that sector are also starting out with very aggressive short rollovers. So chemicals would be the weakest pack. There could be some outperformers such as metals, and pharma is in a mixed bag of sentiments. I think few of the pharma stocks are showing better rollovers than the other stocks. So chemicals and cement as of now are a little bit on the weaker side that I would put. Real estate, yesterday was the first day itself where it has showed a bit of short rollovers. We are yet to see how today's data shape up. So I think these 3 sectors would be on the watch list as of on the short side.
100 points lower is where the Nifty is likely to open, not just one of those phases of the market where everybody wants the correction or everybody wanted the correction. Everybody, let's say 15 days ago, was of the view that markets are overbought, they were obese, mid and small cap stocks, avoid them. The problem is that when the correction comes, nobody likes it. So Hemang, 15 days ago, everybody wanted a correction. Now that correction has come, nobody wants it. Sometimes it's confusing, right? We don't know what we want.
We've all seen how the broader markets have delivered in the last 6 to 7 months, and it's very normal to go through these kind of sharp corrections. The only part where it's not that great is that Nifty, which has not delivered in the last 2 years, even after very strong performance in previous quarter and even this quarter, by and large, the numbers have been in line with certain exceptions. So if you see another, let's say 3-4% kind of a cut in Nifty, then it will effectively give you practically negative return over a 2-year period, which is not a great sign for equity investor when you see more flows coming into the play. But I think we should not get too much clouded by what's happening around us. I think great opportunity is approaching us in terms of levels and valuations, and from a medium to long term perspective, we should look out for some great opportunities to enter.
Another stock which is worth revisiting, Hemang, is actually IndusInd Bank. In a year where most of the financial stocks have done actually nothing, IndusInd Bank has held out. I mean, on last count when I checked on Friday, it was up something like 17-18% for the year. Now 17-18% for the year, if you compare that with defense stocks and EMS stocks and railway stocks, may look like a massive underperformer. But the minute you compare IndusInd Bank with the bank Nifty, it is a massive outperformer. Last 3 or 4 quarters, they managed to get their act together. IndusInd Bank perhaps is the only pure play bank, because HDFC Bank is in it is in insurance, it's in home finance, it is in just about every other major business. ICICI Bank, insurance, security business, they've got subsidiaries. State Bank of India, they have presence in just about every financial vertical. Axis Bank, well, they've bought into the Citibank credit card business, and they've also bought into, they are the majority owner of Max Financial. So some would argue that if you look at the top 10 banks in India, IndusInd Bank is the only bank which is a pure play bank. Hemang, has the tide genuinely turned for IndusInd Bank? Because it was really it was commanding a price to book of 4 times pre-IL&FS crisis. But right now it is available, the pure banking business is available at something like 1.5 times book 1 year forward.
Absolutely, Nikunj. I think if you look at the performance, this quarter itself, the PAT growth was 22%, load growth was 21%. You have a news whereby Hindujas are allowed to increase the stake. Also, a possibility of inclusion in the MSCI, where the weight increase can lead to inflow. And amidst all the volatility that we are seeing in the banking names, this is holding out pretty well. So I do think that both in terms of valuation, in terms of operating performance and the short-term triggers, this is one bank which is looking quite attractive for even, let's say, short to medium term play.
That's the take coming in on IndusInd Bank, especially given its stark outperformance vis-a-vis some of its other peers like in HDFC Bank, or for that matter, Kotak as well. But the Hinduja Group is looking to hike promoter stake in IndusInd Bank and list Hinduja Leyland Finance as well. Let's hear out a slice of this very special conversation, which is going to come up later on in the show today.
You see, the holding company of IndusInd Bank, which is Mauritius based, which I am chairing it, I see since last 1-2 years opportunity how we cover the full BFSI sector. And opportunity came of Reliance Capital. We bidded for it, and we have succeeded. It has been accepted by the COC and the administrator. It's now in the process. And we are hoping that this should come through by November, December this year. Not only what we cover with the BFSI, because with this we get 3 insurance entities which are operating. We get your security business, we get ARC with it. We also have an opportunity to go for the wealth management and the asset management. So with this, whatever opportunities further will come which is missing in this, once we have acquired this, the next step will be how to go for the digitization.
And you also said you want to build almost 35-40 billion of value under this bouquet.
Yeah, this is the plan by 2030, that how this whole sector we see can go for the valuation which will touch around $35-40 billion.
And within your BFSI, you also want to list your holding company. What is the status of that?
Yes, that is one of the plan to list. Hopefully by mid next year, we will go for the listing, so that our shareholders who are global high net worth shareholders who will get an opportunity to partly exit, generate value from it, and which area and where to get listed, that is under review. It can be Singapore, it can be Dubai, it can be Luxembourg, it can be Mauritius. So that is all under review.
I'd like to revisit Ashok Leyland. You just heard from the management Ashok Leyland is owned by the Hinduja Group. Another company where the promoter has a large holding is IndusInd Bank. The third one is actually Gulf Oil. But in terms of India business presence, I guess large part of the business in India is, more than 60-70% I would say is actually IndusInd Bank. This year Leyland has also done rather well. Hemang, could Leyland be like a 2-3 year hold given the bent of the economy? Economy does well, trucks will do well. Or, it's a direct play, I guess.
I do think so, Nikunj, because within the CV space, Tata Motor is more like a global play. So you don't have any pure play, LCV with a certain degree of exposure to the EV part of it, defense part. So I think Ashok Leyland has been delivering a pretty good set of numbers for the past couple of years, and we think that the growth momentum will continue. So if you see any opportunity in terms of entering into it from a 1 or 2 year perspective, surely it will be a great thing to do at this point.
Bunch of other stocks which are going to be in focus, and Sona BLW has come out with an excellent set of numbers. There's been a margin uptick of about 300 basis points, revenue growth of over 20%. There's Chennai Petroleum as well, revenue uptick of over 12.25%. Margins as well have expanded quite a fair bit on a sequential basis, and we're talking about a 10.9% figure as opposed to a comparable in the previous quarter of a tad below 6.5%. There's Chalet Hotels as well. The EBITDA has jumped up 48%. Revenue has seen a rise of about 27%. CMS Info Systems as well. And then, of course, there's Sonata Software too, which has come out with its earnings, wherein the revenue has seen a marginal uptick of about 5%. And margins have come in higher by about 150 basis points on a sequential basis. So these are a couple of green shoots, if you will, within an otherwise bleak market. Having said that, of course, we've been talking about as to how Tech Mahindra is a disappointment. There's Jubilant FoodWorks as well, wherein the management commentary as well is very weak. And they're talking about as to how customers are now downtrading when it comes to their orders. There's Indus Towers as well, which hasn't quite matched up to what the market was anticipating. The margins have come in at 48.5% versus 49.7% on a sequential basis. So these are a couple of disappointing stocks that you may want to look out for as well as some of the movers. But Hemang, just wanted to, get your sense in, and just picking up from what Chalet Hotels has delivered in terms of their quarterly performance, where within hospitality do you still find opportunity to maybe add afresh to the positions or even buy afresh altogether?
Performance this quarter would be good across most of the hospitality names, and the next 2 quarters are going to be extremely good. So we think that the best to participate would be Indian Hotels, followed by Lemon Tree. I think these are the 2 names where you have a fair amount of growth visibility because of the kind of expansion that they've undertaken and the fact that this is going to continue. So the stocks have corrected in the past few days. So these are the 2 names that we prefer at this point.
Let's get in some mid-cap trading strategies as well going on that note. Soni, let's start off with your list first.
Right. So first, I think in the mid-cap space, what we can see is, I don't have a lot of options from the F&O space, but perhaps in mid-cap, IT is somewhere I can see a bit of momentum taking place. So Persistent would be the first, pick that I'll have from the mid-cap IT space, especially or purely from technicals and derivative perspective. I feel that above 59.50, it will give you a fresh breakout and head levels for 6,100. So that can be a target, and it becomes a conditional buy. Just wait for 59.50 to cross, and you can keep a stop loss of 58.80 only then when it has reached that level of 59.50.
Let's get in a mid-cap recommendation from you, Vaishali.
So I would look at a cash counter. It's Sadhana Nitrochem. Yesterday we saw, after a good consolidation, and yesterday we saw a very strong candle formation with a very high volume. And of course, chartically, it favors the pattern is quite, it is Sadhana Nitrochem. It is the price is 91 rupees. So Sadhana Nitrochem at 91 rupees, I would give a buy strategy on this with a stop loss of 84. I would look at a target of around 110, 115. this could be a positional trade. And the other stock, which, well, it is coming as a very, very short-term sell strategy. And I would look at Axis Bank, actually. So Axis Bank, I would be giving a sell with stop loss of 980 and looking for a target of 930.